All right, what's going on, everyone? So, welcome back to the channel, first of all, to everyone who's returning. And if you're new here, then welcome in. My name is Gerardo. We're going to be talking about HEX in this video, and I'm going to give a general market overview, some of our signature charts, give you some updates here on the TA from a lens that we haven't seen completely in this way. You'll see what I'm talking about in a moment, but let's talk about this moving average, exponential moving average ribbon that we've discussed thoroughly on the channel, okay? When we have our cross of our purple quick 21 EMA over our 20 simple moving average, we tend to have rallies. Now, I could sit here all day and tell you what has happened, but without the numbers, we can't really project in any meaningful way. So what I went ahead and did was I looked at every significant cross of this purple curve above the blue curve, because they attempt to represent the same data. So when the quicker version, the purple curve of that data, is above, you're looking at short-term bullish, right? And since HEX likes to have these short-term cycles, right? You see these, for example, we could even take an average in time to see how long it plays out, and we'll do that here live. But I took the average rally of all of these. There are 13 data points, I guess you could say here, 13 separate rallies, ranging from the smallest one being about almost a 2x, right? About an 80% increase in value, and the largest one over here being closer to almost a 12x. And I'm considering these rallies to be beginning at the moment of the cross and ending prior to a bearish cross of these same averages, right? So that's the definition of them. Now, there are obviously some fake outs over here during this sort of consolidation region. So this is outlier data to this model specifically, but we took the necessary data that we wanted to look at, right? The rallies that happened after these crosses, took an average, and it turns out the average rally is about 3.85x. That was a little conservative because I just truncated versus rounding. So we got rid of some of those, some of those final figures there. But you could say rounding to 4x. So an average 4x after these crosses. Now, we recently had our cross here, and we are definitely not 4x from that cross. To give you some perspective, at that cross, the low of the day was at 13.7 cents. So if you were to multiply that by 4, let's do that real quick, then you get 54.8 cents. So you're looking at 55 cents if we were to have our average 4x cross. Now, we're already on the lower end of what is possible, right? With our lowest one being an 80% gain, we're about 96% of an increase in value into this cross, if that makes sense. And so we've entered the lower bound territory of this model, and the upper bound territory would be closer to an 11 or 12x from, again, that 13-cent level or so, putting it closer to $1.30, $1.50 if we were to have something like this. And this would start diving into the territory of the regression rainbow fractal idea, right? So might as well segue into that, where if we were to have one of those moves, and we're talking, okay, right, we're looking at pink potentially here on this level, and that's when you can say that this fractal potentially played out, where we consolidated around yellow before, when we finally crossed green decisively, we crossed through blue. We didn't really stop until purple for a little bit, came back down to blue, or cyan, I guess you can call it, and then bounced up into the pink, right, for a kind of final, I guess you could say 5-wave, a little movement there. But yeah, I mean, it looks good. It looks good. We haven't decisively crossed above green. We touched it once here in mid-July, but other than that, we're approaching it now. And it's tracking ETH very, very nicely, right? Again, we look at the ETH extension from its rainbow historically, and HEX is tracking it so perfectly relative to its moment, where it is now relative to its moment of launch. So it looks really, really good. And you already know the targets for that. I don't want to repeat myself, but these targets range from anywhere $2 to $20 from October 2021 this year all the way into May of next year. You can see these charts for yourself at LookIntoHex.com. but we'll continue on and look at a few charts, right, that we don't really generally look at, but I'll let you enjoy these for one moment. This one here catches my eye. The price extension from the 20-week moving average. This green chart right here, and I'll zoom in on it a little bit. Now let's get rid of a bunch of this, and we'll look at a weekly time frame. That's the monthly, excuse me. This here is a weekly time frame. Now we all know that the 20-week moving average is a significant level in terms of, are you looking at a bull market in your asset, or are you looking at a bear market in your asset? It's a good line in the sand, right? It's a traditional line in the sand. And so if enough people think it works and they use it, then it may even just be a self-fulfilling prophecy. But if you are pragmatic, you just want what works, right? So in general, it can work. Nothing's perfect, right? There's no such thing as a perfect indicator or moving average or model. But if we look at something like this, the reason it's interesting is because when it came to existence back here, after we got 20 minutes of candle data, we saw that we had a bubble above it, right? And the extension above it is something I find interesting because we've never actually been this far extended above it. If you see where our moving average was, it was at about 1/10 of a penny, right? Where price went about 6x above that. And to give you specific numbers, actually, because this is actually rounding, it's higher than that, we look at a chart like this, where when it came to into existence, the highest we've seen price be extended above its 20-week moving average is 8.5x, and that's pretty high, right? That's the highest we've ever been. We've had other bubbles like 3.4x, 2.7x, and then we had a higher high on this chart, which is pretty interesting, at about 4.3x, and it was higher than both of these. And we have this kind of bull flag looking thing. It's really interesting. We have this falling parallel channel, but this is on, this is normalized to the 20-week moving average, which is increasing. And so this bull flag looking thing corresponds to increasing price, right? It's actually higher lows in price and higher highs. Again, because it's relative to something that's increasing. So they're battling in terms of which one is increasing faster, if that makes sense. So when you look at that, you say, well, okay, we're only 2.7x extended, whereas we've been 8.5x extended. So that tells you that you could be looking at about a 3x potentially still to go to reach, say, a bubble of this nature. And so a 3x from here obviously puts HEX closer to 70 cents, which again starts fulfilling that kind of fractal thesis where, well, 70 cents would correspond in the next few months to something like, cyan or purple, depending on how quickly you reach it. Even if it were to take up into December or November, then you're looking at green, but it would start fulfilling that. If it happened quickly, it would start fulfilling that fractal thesis that maybe we're reaching a sort of bubble relative or similar to what we saw back here. So I like to look at that. That's pretty interesting. This is obviously just our risk metric that's on the website. Quarterly ROI is on there as well. It's interesting to see that price, or rather ROI, relative to the first day in the quarter compared to other quarters, it's pretty much on track for an average quarter. It's pretty much on track. And it's interesting because this quarter specifically has been a ride. If you remember the beginning of this quarter, let's zoom in here a little bit. It was outperforming every other quarter to date. Here, let's get rid of this. That was a little too much zoom. A little lag. Okay, there we go. So if we look at something like this, then let's one more. So there we go. Again, we see that originally in the first 15 days or so, this pink quarter, which is Q3 of 2021, was outperforming every single quarter, and we were really, really bullish, and then it just crossed through and started going beneath average, beneath almost every quarter, kind of recovered here, went flat for a bit, and then the interesting part is it came back up, crossed through, and that is now playing, right? It's playing with these highest appreciating quarters to date. This orange one, this red one, and this purple one. We're on track, ahead of track of this red one, for example. and right on track, a little ahead of track of the purple one, which both ended at 4.7x, which currently we're at through a 3.2x. So that tells you, well, there's another 50% appreciation potential, which would put HEX closer to 36 cents or something like that, which converges with our 25 to 55 cent bull flag model. So we're eyeballing these numbers, right? And it's based on what's happened in the past, and we can even outperform, right? If we were to even just reach this average quarter, we're looking at 30 cents. These levels that as I was talking about over here put you closer to 40 cents. And then if we were to have the highest performing quarter to date, we'd be looking at something closer to 60 cents. And that would be by October 1st is when this quarter officially ends. So those are the charts. Those are the main charts I wanted to look at. There was one more, and it's the lifetime maximum ROI. The reason this is really cool right now specifically is because we're creating all-time highs, obviously, right? Which we didn't touch on much TA here, but I mean, just look at it, right? We broke through this previous wick all-time high. We're closing bodies above it. So if we were able to consolidate around here, I would find that very, very bullish, similar to this region over here, right? Where you're looking at a nice bull flag consolidation region on previous all-time high wicks. It's good because you're filling it with actual price data, with market structure, with candle bodies. Broke above it, similar to over here. We're actually closing market structure candle bodies above this. It would be cool. It doesn't matter if we cool off for a while, right? Maybe we just let some moving averages catch up. But anything is fair game here in these markets. But yeah, not to get too much off track, but clearly we have all-time highs, and so it's cool to see a chart like this, which tells you your lifetime ROI. The reason this is cool is because these ceiling functions, as I like to call them, that we do on price, where it just goes flat if we don't have a new all-time high. Well, guess what happens when we do have a new all-time high? It starts curving up. And so if you look at these charts on LookIntoHex.com/max ROI, then you're looking at new all-time highs being printed and new max ROIs being printed on this chart. So before staking, your max ROI is looking close to 4,729x, which is huge, right? In percentage terms, you multiply that by 100%, and then remove 100%. But yeah, you multiply it by 100% effectively, and that's huge, right? That's looking at something like quick math here, 473,000% about. Yeah, give or take a few percent. It's a lot. Now, if you thought that was a lot, if you look at it after staking, then you see that you're sitting at about 8,770x, very quickly approaching our 10,000x design, right? As this white dotted line. Now, that doesn't mean it's going to stop there. It just means, hey, it's fulfilled its design. So anything above this is just, overperforming its marketed design, because we've also been told, right? There's some info out there that says, hey, this 10,000x marketing pitch was conservative, because if you look at something like what Bitcoin did, well, you could say HEX was designed to be a better Bitcoin. So in theory, sure, HEX was designed to 10,000x, but that to me seems like a subset pitch of the actual design, which is, well, HEX is designed to 1,000,000x, if not more, right? I wouldn't be surprised if that were the case. I mean, Bitcoin did it. Again, HEX was designed to be a better Bitcoin in a way, right? It was designed to do a lot of things, but that was one of its design intentions. But hey, look at that. We are 8,770x after staking. So very, very nice, quickly approaching our design. And you can see it here in a different combination where you just have your ceiling functions together before and after staking to get a better idea of where stakers started diverging from non-stakers in terms of their ROI. Big Payday was the clear distinction that separated them, with that huge bonus of just staking for a day, which would get you that 30% bonus. Or was it closer to 40? It was 30 to 40% bonus for just for staking for a day. And so you obviously saw this divergence here from people who weren't staking and those who are. You can see it here without the ceiling functions, but just a running ROI from your all-time low. And yeah, I mean, it looks good, almost at that design. And that's pretty much everything we wanted to cover in this video. I need to get back to working on the website. We're going to add the adoption chart, right? We're going to add a few cool charts Not only that, there was one more. Let me try to remember. We were going to add adoption and stock to flow. You guys seem to really like yesterday's video. It's a good one. I mean, so first of all, adoption, right? We can do HEX versus ETH in terms of unique addresses. We can do HEX unique addresses and price overlaid, so you can kind of see how it responds to it. We can also do, you know, this is not right. This is HEX holders. You know, I wasn't expecting to show these, but hey, you get a little bit of a sneak peek. HEX holders versus stakers. Let's just do that for now. But essentially you have this green curve, which is the number of HEX holders. You have the pink curve, which is the number of HEX stakers. And you have this ratio I made here for you, which shows you the ratio of stakers to holders. Now this isn't exactly your staked percentage, because if you look at how much HEX is staked, it's a little beneath 10%. We can just round to 10%. Now that doesn't tell you that 10% of participants are staked, because maybe those who are staked are more so staked than the average. I'm not sure how I'm trying to say this, but look at this. Look at the divergence I'm trying to talk about. Our staker to holder ratio is 15%, which tells me that about 15% of people who own HEX are staked. And again, that's different from 10% of all HEX is staked, right? There's a difference there. So leave in the comments some thoughts on that. But I thought that was a pretty interesting metric to look at. So again, we can have fun with this. I'm still kind of debating on which ones. The HEX versus ETH one looks good. I mean, yeah, we can do that. We can do these new HEX stakers per day. This is sort of kind of like a heartbeat in terms of, this is really a derivative, right? You're looking at the slope here with this, and you obviously have this spike here with big payday. But now it seems to be on an uptrend on this chart, which is really cool. Kind of like a opening wedge. It's really interesting looking chart. Well, we might have to normalize it to the data set, right? So then it wouldn't be an opening wedge. So yeah, we'll have fun with these, but let me know which ones you want to see. A little iffy on the adoption charts. The stock to flow ones are pretty easy to add because it's mainly just this one, right? Again, we'll smoothen it to monthly as well. We'll get some nice, smoothen stock to flow models here. And yeah, one of these color schemes will do. Yeah, let me know in the comments what you think. But we're going to be adding some new charts, so I'm going to get working on that. So I do appreciate you watching. Subscribe if you're new. We're almost at 6,000 subscribers, so thanks so much for that. Let's blast right through that. But again, comment, like, subscribe, share, all that great stuff. Thanks for watching. What do you think of the new camera audio setup? Trying a little something new. So yeah, let me know what you think of that. But again, thanks for watching. Catch you in the next one.